Asian markets mostly decline as investors assess political developments in the region. Oil markets react to OPEC's delays in increasing production, and we look at the rising price of gold amid shifting demand dynamics and Bitcoin's recent surge. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian markets ended the week mixed as investors digest economic data and political developments in the region. Japan's household spending fell by 1.3% year-on-year in October, slower than economists' expectations of a 2.6% decline. On a month-to-month basis, spending increased by 2.9%, far exceeding the anticipated 0.4% rise. These figures suggest a complex consumer behaviour landscape amid economic uncertainties. The Nikkei 225 fell by 0.9% and South Korea's Kospi declined by 0.6%, reflecting investor caution. Hong Kong's Hang Seng Index gained 1.6%, indicating pockets of optimism, while Australia's S&P 200 was 0.6% lower. South Korea's Kosdaq declined 2.1% amid political uncertainties surrounding President Yoon Suk-yeol's brief declaration of martial law. The top opposition party has alerted lawmakers to be on standby for potential further developments. The political instability has contributed to market volatility and investor unease in recent days. For more on this, I'm joined by Rafet Zahidov, who's an independent market analyst joining us here in Istanbul. Thanks for being with us, Rafet. Now, how do Japan's latest household spending figures reflect the country's economic recovery trajectory?
Based on the figures, Japan household spending has decreased by 1.3% year-on-year this October. This shows a decline in the household spending. However, this isn't as extreme as we thought. So the decrease shows the consumers still being cautious about the economy. However, it's not been as extreme as it is, shows the recovery in action, which is a good sign for the Japanese economy. However, there has to be government intervention in order to curb this even more and get the economy going again.
Let's have a look at South Korea now. The political situation there, how is it influencing investor confidence and market stability?
As we know, in the recent week, there has been a martial law that was imposed. It was imposed by the South Korean president. And of course, this showed a decrease in the South Korean market index. And this, of course, will cause political instability. And as a result, the investors will be wary on their investments and will hold back until there is stability in place. So until then, investors would like to take back some time and then see how the economy recovers. That's why there has to be government intervention as well at South Korea in order to create stability, increase government spending to bring in the investments.
Could there be any broader implications within the region?
Of course, as we've talked about the Japanese economy recovering, this is going to bring more investment to the Japanese economy and it's going to affect the regions around it. But also the martial law and the political instability that was in case this recent weeks in South Korea will lure investors to other economies around the region. So this could be to Japan, to China as well. So these combined different factors show the misconnection between these economies in the Asian market. But of course, each of these factors will affect the investors' behavior. What
are some of the other factors that are contributing to the current market performance in the Asia-Pacific region?
Let's look at the market performance first. We've seen that Japanese index has actually increased, whereas others have been struggling lately. And this is going to result in basically there can be different factors that's causing this. The internal factors could be the problems in South Korea, the martial law, but also the improvement in the Japanese economy, the recovery at the Japanese economy. However, there could be external factors such as the American elections, but also the tensions between China and US that could also affect this performance in the region.
Okay, Rafet Zahidov, we will have to leave it there. Thank you very much for your analysis. Now a quick look at some of the other top business stories from around the world. India's economy has hit a rough patch, growing at its slowest pace in 7 quarters. In the July to September period, the country's GDP expanded by just 5.4% compared to the same period last year, far below the 6.5% growth that analysts had been expecting. The slowdown has been attributed to weak manufacturing and private consumption. Meanwhile, the central bank has kept the benchmark interest rate unchanged at 6.5% as expected. Investor sentiment in Chinese stocks is improving, driven by hopes for supportive policies ahead of next week's Central Economic Work Conference. The mainland CSI 300 rose 1.8%, Hong Kong's Hang Seng gained 1.4%, and the Shanghai Composite surged by 1.2%. With signs of stabilization in the manufacturing sector, optimism is growing, yet concerns over geopolitical tensions and currency depreciation risks continue to cloud the market's recovery. Jobless claims in the US rose to 224,000 last week, showing signs of a cooling labour market. Economists say hiring remains steady, but activity has slowed as companies hold back on increasing headcount. November payrolls are expected to recover after weak October data. Meanwhile, the US dollar remains under pressure amid rate cut expectations. And GameStop shares jumped 6% after meme stock influencer Keith Gill, known as Roaring Kitty, posted a cryptic image on social media, trading as high as $30.87. Gill's posts often spark excitement among retail investors, as seen during the 2021 Reddit rally. Analysts say the rise shows a comeback for meme stocks. OPEC Plus has extended its production cuts into 2026, citing weak global oil demand and ongoing geopolitical tensions. The move aims to stabilize oil prices and rising output from non-OPEC producers. The Alliance of Oil-Producing Nations has extended its production cap of 39.7 million barrels per day to December 2026. Voluntary reductions of 2.2 million barrels per day will now continue into the first quarter of 2026. Brent crude futures fell by 9 cents to $72 a barrel, while WTI futures dropped 4 cents to $68.27 amid ongoing concerns about sluggish demand, particularly from China, and increased output from non-OPEC producers. The return of Donald Trump to the White House, who has pledged to boost US oil production, adds uncertainty to the global oil landscape. The policy direction could counteract OPEC Plus's production cuts, leading to increased supply and downward pressure on prices. Let's get more on this now with Jonathan David Lamb, oil and natural gas policies analyst. He joins us from Prague. Good to have you with us. Now, how effective will OPEC Plus's extended production cuts be in stabilizing oil prices?
It may not be enough. We've seen this year that OPEC has continued to postpone these cuts as the market weakness has been obvious throughout the year. And I think if the cuts had not been postponed, we would have seen oil prices fall further. I think that they're not in a position to cut more. That would send kind of the wrong signal to the market, but they must be hoping that this is enough. There's certainly a risk that it isn't.
And we've seen a fall in demand for oil. What are the primary factors contributing to this weakness?
The main weakness, I think, is industrial weakness. So if we look at OPEC's projections for 2025, they're projecting basically no oil demand in the OECD, and all of the demand is going to come from emerging markets. And it's because of the weakness of industrial production in countries like Germany and the follow-ons that come from that in the transport sector. So weakness from petrochemicals, weakness from other factories, and weakness from the heavy goods sector.
And how would increased US oil production under the incoming Trump administration impact global oil markets?
Well, it makes OPEC's job a little more difficult, doesn't it? So President-elect Trump is promising to do everything he can to increase oil production. Some of what he's talking about is actually longer-term issues, like maybe more drilling in Alaska and offshore. These won't affect oil production or oil prices straight away, but he's going to try and pull out all the stops. because he actually wants a low oil price, because, as you know, Americans like their cheap gasoline. So we wait and see the extent to which he can do this in the time frame, but it does add another complication to OPEC.
And what role have geopolitical tensions been playing in shaping current price trends, particularly in the Middle East?
Well, we've seen in the last couple of years a lot of things happen that have impacted prices. And in the Middle East, the big one was the effective closing of the Red Sea, which had a big impact when it happened. And generally, when these things happen, the short-term impact can be very big. Oil prices can jump up. And then markets will normally find a way around the problems, and then the oil price will settle over time. So in the short term, yes, geopolitical issues can have a big impact.
Okay, Jonathan, David Lamb, we will have to leave it there. Thank you very much for joining us.
It's a pleasure. Thank you.
Now, gold prices reached $2,640 an ounce as markets await US payrolls report, with unemployment claims suggesting a cooling labour market. A 70% chance of a December rate cut could boost gold by lowering the cost of holding it. Meanwhile, China's gold demand has declined, though investment remains strong, with stabilisation expected next year. Investors are closely watching for further market signals. The Istanbul Economy Forum is underway, and this year's theme is artificial intelligence and the economy. Advancements in AI technologies are taking the world by storm, being more and more integrated in sectors like finance, manufacturing and healthcare. Emre Boz was at the event and sent this report.
Turkey is preparing itself for the dawn of a new era, the age of artificial intelligence. And everything AI related was discussed here at the 8th Istanbul Economy Forum. Analysts are saying that the AI sector is going to be worth $15.7 trillion in 2030. That's more than the economic output of India and China combined. And artificial intelligence is used in things like automation and data processing. And that's why speakers from all around the world gathered here in Istanbul to talk about how it can be a tool to improve economic productivity. And some are saying that it's a power that we must harness.
Everything is changing. I mean, we are just in the middle of a breakthrough that is very close to invention of the wheels, for example. But I'm not sure whether we are realizing that recently, but everything is changing. I mean, the world is changing, our thinking is changing, our brain is changing, the way we do business is changing. This is why it's not all about technology. This is the world's changing situation right now. Maybe in 10 years, 15 years' time, there won't be the world that we know right now. This is why it's very important to adopt ourselves right now is very important.
In northern Chile's Atacama Desert, a solar energy revolution is underway. Solar projects now down the region, and is all happened over the last decade. Michael Fox has the story.
Electricity does not yet run to this edge of the desert. Solar is one of the only games in town. Joseline Olivares moved here last year with her family. They set up 24 solar panels.
If we have this free, blessed sun right here, how can we not use it? It's a large investment up front, but it pays off over time.
Across the region, in the driest desert on the planet, something is growing fast: solar plants.
This is just one of the more than 500 solar energy projects that have been developed here in the desert of northern Chile over the last decade. 100 more are on the way.
Solar projects cover the landscape and stretch across the desert floor, a new renewable resource flourishing in one of the harshest ecosystems in the world. In the desert oasis town of Pica, most farmers either have their own solar systems or have plans to install them in the future.
10 years ago, we could never have imagined this type of solar energy would have spread so fast.
Solar plants currently provide for more than a quarter of Chile's energy needs, and the country wants to hit 70% renewable energy by 2050.
The desert has a huge potential and capacity in terms of the land and the conditions.
Environmental engineer Elizabeth Jara Maldonado has worked with projects bringing solar to indigenous and isolated communities without access to energy, but she also has concerns.
What happens after the solar panels finish their life cycle? What do we do then? Because we're covering our deserts with solar panels, and at some point they are going to have to be replaced.
Is an important question for the future, but right now everyone is thinking about the present, and the sky or the desert is the limit. Michael Fox, TRT World, Pica, Chile.
Pressure is mounting on South Korean President Yoon Suk-yeol as his ruling party is calling on him to step down for the safety of the country. The party leader says Yoon should be suspended, but stopped short of urging members to vote for an impeachment. Frank Smith reports from Seoul.
South Korea's National Assembly will vote on whether to impeach President Yoon Suk-yeol over his attempt to impose martial law. On Tuesday, President Yoon announced martial law, plunging the country into political turmoil. Amid chaotic scenes with armed troops at the National Assembly, lawmakers scrambled to vote to nullify President Yoon's decree. Democratic Party lawmakers now say they will not stop until President Yoon is removed.
The president said he made the decision to stop the Democratic Party's tyranny. I share the same sentiment on their tyranny. Their tyranny has crossed the line and must be punished, but it cannot rationalize the unconstitutional and unlawful declaration of martial law.
Although some conservatives voted to nullify martial law, party leaders say they will not back impeachment.
The opposition party believes that President Yoon Suk-yeol should no longer be the president of the country, so it will pursue a second and third impeachment and will make sure President Yoon Suk-yeol ceases to be president of the Republic of Korea.
President Yoon had been mired in scandal and record-low approval ratings, and unable to pass legislation by a National Assembly controlled by a majority opposition. While polls suggest most people want him removed, others still back him.
I want our children to live in a free democratic country peacefully and happily, but that's not happening. Those Korean Democratic Party lawmakers have taken over and are denying the government its right to rule.
Nightly demonstrations demand President Yoon's removal, as some people worry the country may turn back to dictatorship.
I'm here to make those people who tried this undemocratic move to accountable, and also people will be on the streets until they really step down.
Lawmakers are now trying to piece together just what happened and who was involved. South Korea's Vice Defense Minister said the decision to deploy troops to the National Assembly was made by Defense Minister Kim Yong-hyun, who resigned Wednesday. The consequences for President Yoon over his failed attempt to impose martial law are mounting by the hour. Prosecutors on Thursday opened a treason investigation, and the case has been assigned. Demonstrations of both opposition and support for President Yoon are likely to continue, with massive rallies expected on Saturday when lawmakers plan to vote on impeachment. Frank Smith, TRT World, Seoul.
Brazil's Amazon faces a new challenge. Illegal gold mining is on the rise, and now even indigenous communities are getting involved. But what's behind this crisis? Christina Simic explains.
Deep in the Amazon, the Munduruku tribe faces a tough choice. Gold promises wealth, but mining destroys their lands. Illegal mining has become a lifeline for some indigenous families. They sell gold to pay for food and even school fees. But this comes at a huge cost. Forests are being cut down and rivers are poisoned with mercury.
Some families survive thanks to this illegal mining. They live off these activities and send their children to study at private universities. Then it's difficult for all.
Gold prices are high, fueling a boom in illegal mining. Even tribal members are joining the trade, which is backed by organised crime. They say poverty and a lack of government support leave people with no choice.
Gold is very important. As our needs here are big, we depend on illegal mining.
The Brazilian government is cracking down. Helicopter raids target illegal camps, destroying equipment. But miners often flee before agents arrive. The conflict has even divided families. Economic pressures also make the fight even harder because illegal gold mining makes money and government's raids take it away.
The movement in the city has dwindled due to the anti-illegal mining operation. It is as if all the people were scared of working in mining and losing their goods and money.
Brazil's challenge is clear. The mining is fueling crime, dividing communities and damaging the Amazon. The road to a solution is steep, but it is not impossible. Without action, the cost of inaction will only grow. Christina Simic, TRT World.
Vietnam's economy has surged over the years, but its transportation network hasn't matched its pace of growth. The journey between the country's northern and southern regions can take over a day, a stark reminder of the outdated infrastructure that holds back further growth. As Omar Bakalola reports, the government now wants to change this.
Vietnam has long been seen as a rising economic star in Asia. However, it faces a major hurdle: aging infrastructure. Overpopulated cities like Hanoi and Ho Chi Minh City struggle with congestion, and the country's rail network is one of the least developed in Southeast Asia. The government has announced a $67 billion high-speed railway project, stretching more than 1,500 kilometers, will cut travel times between Vietnam's two economic centers from 30 hours to just 5.
In my opinion, a north-south high-speed railway will save a lot of time for people in the long run. Traveling will become more time efficient. With the time saved, the economy can also benefit greatly. I think the investment capital needs to be substantial enough to fund the north-south route. The larger the investment, the better and more beautiful the railway will be.
The project aims to boost Vietnam's GDP by nearly 1% annually and make it a stronger player in global supply chains.
The railway is going to supercharge the Vietnamese economy. We're talking about increased demand for goods and services, more attractive investment climate, and better connections with neighboring countries. This opens up all sorts of opportunities for foreign businesses to expand operations, find new partners in the country, and tap into new markets.
The railway is also expected to ease Vietnam's high transportation costs, which currently rank among the highest in the region.
I think that there is a high-speed rail running from the north to the south. It will make more convenient for many people to travel. If taking a flight is expensive, people will find an easier way to travel with this option.
The railway will link 20 cities and provinces and should ease population pressures in major urban centers. Commuting between smaller towns and larger cities could become a viable option, giving Vietnam's workforce more flexibility.
In developed countries, people can live in one city and commute to work in Hanoi in the morning, which is very convenient for working. This could help reduce Vietnam's population concentration. People wouldn't have to live in major cities, but could reside in nearby towns.
Scheduled for completion by 2035, the project aligns with Vietnam's vision of becoming an industrialized nation by mid-century. But Vietnam's history of delays in infrastructure projects could mean this journey could take longer than expected. Ömer Bakaloğlu, TRT World.
The cat is out of the bag. Iconic British luxury car maker Jaguar has revealed its new branding as the car industry shifts towards electric. It's stepping into a new era, moving past what it calls traditional automotive stereotypes to a futuristic and groundbreaking dawn. Panay Shasta reports.
Take your breath away at Earl's Court is the shining...
A century-old British legacy is turning the page. Jaguar has announced that its iconic logo is history. The Wildcat will be replaced by the word Jaguar in the company's new unique font. The car maker has been financially struggling for a long time due to Chinese dominance in the global market as the industry pushes towards electric. Around a month ago, Jaguar removed all social media posts, signaling a brand new start with "Copy Nothing" motto. Later on, they released a teaser of their new era, which will completely transform the Jaguar brand, calling the new family of Jaguars unlike anything anyone has ever seen.
So much disruption going on in the market.
We really needed to understand the absolute core DNA of Jaguar. That's what we need to do to face the electrified world in the future. And in doing so, we look at actually its bold creativity, its need to have an emotional connection with its audience, and that's exactly what you see here.
The luxury car brand also unveiled a new concept car, the Type 00. The car is a fully electric with no rear window and a dystopic design inside out. The new logo stands proudly embossed amidst a series of horizontal lines at the front of the long nose of the car.
I think what they've done now with the new Type 00 is absolutely embrace the avant-garde. They're diving into the future. I think the signs are that the design, that's all we've seen so far, the design is it's interesting, it's head-turning, it's quite challenging actually. It will maybe deter traditionalists, but this kind of Marmite design vibe is what seems to work nowadays.
The production-ready version of the Type 00 will be revealed late in 2025 and is expected to cost more than $120,000. Time will tell whether Jaguar's bold move will attract more customers. But for now, car enthusiasts seem to think there is a lot to pore over. Pinar Nishasta, TRT World.
Well, that's all your business news for now. Thanks for watching.